Today, we're going to be looking at a very important topic, and that topic is titled Capital Markets Ecosystem. So, if you're in business or you intend to get into business, you want to hear exactly what I'm going to be talking about. Because today I will be going much deeper into the ecosystem, the business success ecosystem, to ensure that you have a much clearer idea about this subject matter. On today's subject, capital markets ecosystem, we will cover four main headings. I will look at corporate debt management, corporate wealth management, personal debt management, and personal wealth management. As we look at the subject matter, there's four things that will stand up. The debt portfolios, how to access the debt portfolios, how to leverage the debt portfolios, and how to mitigate. Mitigate is absolutely necessary. The ability to mitigate debt is a vital part of doing business. So we're going to do a deep dive into that today to ensure that you have a much better understanding of the subject matter. Now, do permit me to introduce myself. My name is Gary Thompson. I'm a business development consultant by profession. I'm a humanitarian by nature, and I'm the self-published best-selling author for several books, including Billionaire Codes and Manager's Toolkit. I'm also the author for 10X Branded and Marketing Blueprint, Business Success Ecosystem. All right, this program comes to you with the kind compliments of Global Capital Inc. and 10X Branded and Marketing LLC out of New York. Now, let's get the conversation started. And of course, I want to encourage you and invite you to use a chat box so you too can be part of this conversation. Every business, the competitiveness of businesses across the world, you need access to capital. But as you get access to capital and you're able to increase your disposable income, you too need to identify smart ways of leveraging that excess liquidity into building positive income cash flow. Today, we're going to be looking at some of those issues, but let us begin. In starting this program, I say we will be looking at corporate debt management, corporate wealth management, personal debt management, and personal wealth management. I want to begin this conversation by looking at corporate debt management. By this, it is assuming that you are taking a debt and you're taking a debt from the corporate commercial banks. But one of the things that we talk about a lot at Global Capital Inc. and our leaders at 10X Branded and Marketing LLC out of New York is we talk about the smart ways and the not so clever way to buy debt. And I really want us to get into this today. What are some of the things to consider when you are attempting to buy a debt? One of the first things that we always look at is the portfolio, because among commercial banks, there are a number of portfolios that are available to raise capital. One might be the corporate debt, but the other can be a BLOC or a HELOC. And they carry major differences. A corporate debt is calculated based on compounded interest. It is collateralized and it is amortized. And largely because of this, the interest is calculated 12 months in advance and applied to that debt cost. It is different in terms of a HELOC and a BLOC, and it is absolutely necessary that you understand the portfolios and how to mitigate the best portfolio in order to bring down your debt cost. And these kinds of conversation definitely has to be amplified. Along with this, we talk about capital market access. And capital market access simply means that the financial markets may be there, but they are not easily accessible, largely because of the pre-qualification criteria that exist for one to access those markets. The importance here is that you must commit the time, talent, and the resources to understand those pre-qualifications and ensure that you build up your brand, your business model to reach those pre-qualifications in order to access the debt portfolio. Availability does not mean access. All right. It is important that you really commit that time, whether you're a micro, small, medium businesses, to understand what are those pre-qualification criteria as we begin to have that conversation on capital market access. Availability, capital market availability does not mean capital market access. And that can mean several things. Perhaps I'll give a few other examples as we go into today's program. The other important concept that we look at is capital market leverage. And this for us is a very important subject because let us say that you take the time to understand the capital market portfolios, you take the time to understand the capital market access, and now you are focusing on capital market leverage. As it relates to capital market leverage, it is very important to take that time to ensure that the project is going to give you the financial leverage that you so desire. And the only way you can make an informed and educated decision about the business model to give you the kind of leverage that you want is if you have market research and market intelligence. And I'll talk a little bit more about that when I'm talking about financial projection or cash flow projection. Understanding how to up-level that debt in the smartest of way are very important financial management tools that you need to know. And I'm really trusted that your financial advisors, your certified public accountants, your economists, your business consultants, they are working with you to ensure that as you access debt, you are identifying the smartest and most practical ways of up-leveling that debt. The fourth element here is where we talk about debt mitigation, capital market mitigation. This is so necessary because it is the ability to mitigate debt that really allows you to rest much better at night. And let me explain this a little bit. From research, from experience, what we are seeing is that the young entrepreneur, you start a business and you're excited about the brand, the business model that you developed there. And what you're thinking about a lot, what dominates your prefrontal cortex, your thought, is that you need capital to scale. But what happens very often, because you are not taking the time to predetermine whether you're buying a good debt or buying a bad debt, it ends up being a bad debt because all of the analytics were not taken into consideration. If you want to be successful in business, these talking points that I'm presenting to you, they're absolutely necessary. The capital market ecosystem represents a range of essential talking points, and you need to understand. Many of them may be give you a new approach, a new way of thinking as you go about taking debt, but I want to show you it's going to give you peace of mind. It's going to bring down your stress level and up-regulate your energy level because the fact you have the information that allows you to make informed and educated decisions as to how you buy debt, all right, how you leverage that debt, and how you mitigate the debt process. Now, the mitigation process also will allow you to not only fully understand the financial tool that you're using, but it also allows you to really stop and take stock of all the realities associated with that debt portfolio. And just let me hint on a couple of that. You take a debt, it's called your principal balance. It's important for you to recognize that that debt, called the principal balance, has interest rates attached to it. With the interest rates, you have monthly, collateralized, amortized debt obligation. Simply means that every single month you have debt obligation that you need to meet. But beyond all of this, it's important for you to recognize that the debt has a life cycle. And the debt over its entire life cycle has a debt cost that you need to pay very close attention to. Because it is the ability to understand the debt life cycle, the debt interest rate, and putting yourself in that position of trying to understand how to speak to these issues in a manner that allows you to manage the debt life cycle. The ability to manage your debt life cycle effectively will ultimately allow you to manage the debt cost, regardless of how high the interest rate is. So when we talk about debt mitigation tools, it's about you adopting the right financial models that allows you to cut years of the life of a particular debt and by extension, reducing that debt cost. Now, this tool is not for everyone because of the fact that it really requires you to have certain assets to be able to leverage them to your advantage. And of course, those who don't have the performing assets or the right assets, we will talk to you at Global Capital Aid to really ensure that you can still find innovative ways of leveraging this. As we look at the debt capital portfolios, one of them that is not talked about so much is what we call smart capital leverage. Perhaps if you don't have the equity to leverage as a tool to manage and mitigate your debt, Smart capital leverage can give you that too. I will not go into that today, but as you come into us, Global Capital Inc. and 10X, branded and marketed LLC out of New York, we will work with you to ensure that you get in this body of knowledge and you know how to apply it to save hundreds of thousands and millions of dollars on your debt portfolio. Now, as I discuss the issues surrounding capital markets, it is important for you to also deduct from this discussion that the principle I've just given to you, the principle where we look at capital market portfolio, capital market access, capital market leverage, and capital market mitigation. All of this has relevance to not only the debt capital market, but the equity capital market and the credit capital market. All of these tools are applicable to these markets. When you get into equity, before you get into equity, it's not only important for you to recognize the opportunity to access capital, but equity, in most cases, your partner is not a finite partner. All right, the investors, the VC fund and the PE fund, when they come in as general partners, they're coming in for a finite period, a limited period, which means that they want to cash out. And if you don't understand what you're getting into here in the mitigation process, you can leave yourself exposed where you are pushed to IPO, initial public offers, where you're pushed to LBOs, leverage buyout, where you're pushed in places where you are not necessarily comfortable going, largely because you did not think through the process, or you're certified public accountants, you're professional financial advisors, and your economists, those persons did not give you the right advice. And that's why we are here to ensure that you get the right information to allow you to make informed and educated decisions before you make your first step. You want to see through the entire process. So everything that I'm saying here is relevant to all of these financial markets, and you need to know this. All right. So I encourage you, if you need more information, feel free to reach out to us for a free consultation. Myself and our team, we will be happy to talk to you about these portfolios, how you should really position yourself to access debt, equity, credit, capital markets. You want to understand all the portfolios that exist here. You want to understand how to access the portfolios. You want to understand smarter ways to leverage those portfolios. And you want to understand how to mitigate this entire process that will allow you to save hundreds of thousands and millions of dollars on the entire transaction. You can sleep better at night because the fact that you know that all T's are crossed and I's are dotted, and all the essential things that are to be looked at are looked at. I'm going to go a little deeper here because as we look at the capital market ecosystem, it's important for you to get this kind of information. Now, in taking a debt, you want to know it's a good debt as against it being a bad debt. And how do you know whether it's a good debt or a bad debt? I'm going to talk to you very briefly about 7 important subheadings under this ecosystem. And I'm still looking at debt mitigation. One of the first things that you want to do in debt mitigation is something that we call income analytics. It may be your cash flow projection or your financial projection. But the manner in which you arrive at your cash flow projection, your income projection, it's an important subject matter. And let me say why I'm saying this. From my experience in working with business owners, and some consultants, one of the things that they do is listen to your story and develop what is known as your cash flow projection and the business plan. Now, there's a number of things that I want to say about that. If you're just extracting the information and developing these 2 important documents, the question that you must be asking yourself is how accurate this is. There is 3 unique approaches, and I say unique, that must be considered when you're attempting to do the income projection, cash flow projection. There are important things to consider. One is the cash flow projection or the income projection based on market analytics. And this is why we call it income analytics. What the income analytics is saying is that before you arrive at a financial projection, you subject that entire process to what is known as market research. And you take that market research and make it into market intelligence. Now, there's primary market research where you go into the ground and you are interfacing with the realities on the ground that allows you to make informed and educated decisions as to how to go about developing the financial projection and the business plan. So you have primary research, you have secondary research. While secondary research is going to reduce the cost, you have to ask yourself, how reliable is that secondary data? So the 2 most important is what is called the primary market research, where you're going to the ground with your team, you're interfacing with the market realities, you're documenting data, and then you come back to your office and you analyze that data, making it market intelligence. And it's from that intelligence you incorporate it and you build it out into your financial projection model. The cost associated with doing primary market research is high. And this is perhaps one of the reasons why many businesses, micro, small, medium, and to some extent large businesses also, shy away from this kind of in-depth market research because of the high cost associated with this. I always say that the cost will justify the means because it is from the research you're able to identify your target market, you're able to identify your target market size, you're able to identify your target market lifestyle, culture, and social class, needs, wants, and expectations, dreams, hopes, and aspirations. And it is by understanding the target market size that you're able to forecast the potential of that market cash flow. In the absence of understanding the demographic size, you cannot arrive at an accurate or even a close to accurate analysis or projection of the potential of the market to cash flow, and by extension, the potential of the business to cash flow, so has to develop your financial projections. So in using primary data, I'm emphasizing the importance of it. In using secondary data, I'm emphasizing the risk associated with it. You want to be certain that when you're using secondary data, that data is reliable, it's recent, it's not outdated. If it's outdated, it can frustrate the entire process. Market realities change. The last thing that you want your financial projection to be, that financial projection statement, the last thing that you want it to be is to be based on speculative analysis. And you've heard me talk about this before. And this is where you sit in your office, your ivory tower, and you come up with a figure. And you say, this is my projection for year one. You don't even know if that represents 1%, 2%, 5%, 20%, or 0% of the market, because the market may not exist based on the market realities. But you don't know this because you're not doing the market research. So you do not have the market intelligence. So you cannot make that decision. So it's important for you to stop and take stock of these realities. And so far, I'm only at the first of the 7 of these analytics. We're so far looking at the income analytics. Let's look very briefly now at the expenditure analytics. Now, in most cases, when you want to cash flow a debt, it will incur some form of expense. Even if you're taking a debt, like the smart ones used to do in the days gone by when the New York Stock Exchange market would have started, they'd take a debt at 0% APR for 6, 12, or 18 months. They put it under asset management, cash flow it, cash out of it at a certain point, and walk away with all of the profit. But in spite of doing this, yes, there's a cost associated to that kind of investment, that kind of capital leverage. So it's important to also take that time to understand the cost associated with leveraging that debt. And this is not only the cost associated with your monthly debt obligation or your annual debt obligation. It has to do with the cost related to operational management and administrative costs. So both the operational and administrative costs must be fully considered in this process. Because failing to look at this, you can also be misreading or turn a blind eye to essential financial factors in the business cash flow process. So you need to look at that, ensure that you're a certified public accountant, your financial advisors, your economists, your business consultants are really walking you through this process. Now, if they're not, and you're not satisfied, I encourage you to reach out to us at Global Capital Inc. and 10X Branding and Marketing LLC out of New York. Now, the third analytics here is what we call the net NOI analytics. NOI speaks about the net operating income. And this simply reflects, after you remove all of the expenses, you should have a balance sheet. That balance sheet could be a surplus or a deficit. A surplus means that you have a positive cash flow, or a deficit means that you have a negative cash flow. And all of these things are things that needs to be seen beforehand. A negative cash flow is not bad if you're doing this intentional. All right. You can intentionally set out to have a negative cash flow because you're taking the profits and you're pumping it back into something else that is necessary to grow the business. Later on, we'll talk about all of that. All right. But these are important concepts for you to understand. There is something that we call the ROI analytics. The ROI speaks of return on investment. And now this is something that is extrapolated throughout the life of that debt. It can be broken down into by month analytics based on the business cash flow. But these are also things that we will get deeper into this and with you. The ones that I really want to amplify here today is what we call the market analytics. All right. And you're taking a debt and you have not taken the time to understand your market analytics. What exactly do I mean by the market analytics? You want to know two things as you set out to do this market analytics. You want to understand your accommodators, the market accommodators, and you want to understand the market enablers. All right? The market accommodators and the market enablers. Why is this so important? This is important, Lash, because it is the enablers that allows you to really understand the potential or the possibility to cash flow your brand. And anyone who followed my last program, which was yesterday, we talk about the economic systems ecosystem. This is a major influencer as relates to the accommodators and the enablers. We talked yesterday about mixed economic system. We talked about planned economic systems or controlled economic systems. We talk about open economic systems. You need to understand these systems, the market that you're playing in, to understand if the accommodators are there and if the enablers are there. So you have it at the political level and the constitutional level, how things are set up. But then you have it also at an organizational level. And this is where we talk about chambers of commerce, trade associations, and BSOs, business support organization. And you have the specific target market here also. All right. You need to understand these systems. Now, there's so much to talk here. Technology is also allowing you to break in to some of those barriers that exist in planned and controlled economic systems. But those are things that at another broadcast, we will go into those details. But it's important that you take the time as you do the market analytics to identify the accommodators, identify the enablers, and move towards building out relationships with all of them. You want to build a relationship at a governmental level. You want to build relationships at an institutional level, meaning the chambers of commerce, trade associations, and BSOs. You want to build relationships with a specific target market. These are absolutely necessary in doing a business. If you're not building out relationships, you don't have a business. All right. You don't have a business. All right. So it's important for you to get this and get this right. We're so happy that at Global Capital Inc. and 10X Branding and Marketing LLC, we out of New York, we have committed many, many years to study how the top 100 companies are functioning, what they're doing, and we are bringing to you some of those best practices. We are innovating best practices that we believe is essential to move your businesses forward. And it gives us tremendous pleasure to do this. But remember, it's not enough to have the knowledge, not enough to have the information. It's important to apply that information. There is where you're going to get the superpower, the wings to fly and move your business forward, leapfrog your business ideas. And I must say that in studying the top 100 companies, we believe that we are ahead of the game. We are ahead of the curve, the information curve that is necessary to help you to compete and win and have that competitive advantage in how you do business. All right. So this is an important ecosystem that you need to understand. So far, we're still talking about capital market ecosystem, but we're going so deep into it to show you the importance of this subject matter. This is a masterclass you're getting here today, a crash course that you're getting here today in the corporate capital markets ecosystem. You need to understand it. Another important thing that I want to talk about here is the team dynamics analytics. You're coming to an investor to invest with you. It doesn't matter how smart you are. It takes more than you to run an institution, to move an organization forward. So one of the things a clever investor is going to be looking for is your team dynamics. They're going to analyze this here. And this simply means you need to have among your team the right team players. You need to have the global thinkers, the social actors, the transformational leaders. You need to have the dream makers, the game changers, and the trendsetters. It's absolutely necessary to have these players among your team dynamics, particularly so when you want to influence positive public response. You want to influence accredited investors. You want to influence high net worth and super high net worth individuals to come on board with your initiative. Absolutely necessary. All right. As we get ready to play a major role in this space, these are things that we will be looking for, and we want to prepare you for what is to come. So you're prepared when that time comes to activate and access these possibilities. Now, the last that I'm going to talk about here is what we call the corporate culture analytics. In the private equity space, all right, or the public equity space, sharp investors, sharp players in the capital market, they want to know about your corporate culture. Do you want to know how important this is? The way you treat your employees is a predeterminant of the level of absenteeism that you're going to get and the level of staff turnover that you're going to get. The research is showing this. We have studied the top 100 companies in the world, and what we have seen, it's amusing. Among the top 100 companies, the absenteeism and turnover rates are far, far, far lower, by far. Is it by accident? No, it's not. It's by design. And we now want to share that design with you so you could adopt it into your institution, into the corporate culture to reduce absenteeism and staff turnover. Why? Because when your best minds are absent, when you lose your best minds and staff turnover, what happens It affects you alone? No, it affects the cash flow potential of the organization. It affects the corporate image of the organization. It doesn't affect the corporate image, it does. And let me say why. You lost your best person who is responsible for managing your value chain of getting products the from the factory to the final consumer, but they're absent. You don't have a replacement. What happens in the value chain? There's bottleneck. And when there's bottleneck, customers are not able to get their product on time and they become stressed out. And they become stressed, they become dissatisfied customers. They become dissatisfied customers, they stop using your brand. They move over to your competition. Does that affect your corporate image? It does. Does it influence an investor wanting to invest with you? It does. So these are important things that we look at. As we look at your corporate culture analytics, the ecosystem surrounding your corporate culture, we work with you to build out your corporate culture to impact the workforce. All right. Your workforce, they're human beings. They have dreams, hopes, and aspirations. And there's a whole lot of things that I want to talk about here that can help you to beef up your corporate culture in this respect. As when you come in, we're going to work with you on a one-on-one basis, on a group basis to really help you to get this right. You want high performance, sustained high performance. There's a number of things that must be looked at here. The training content is totally inadequate to give you the kind of high performance that you want. Again, from research, we're seeing all of these things. The top 100 companies understand these things. You need to understand them too. We have done the research, we have built the thesis, and we are willing to share this information with you. All right? We're here to serve you. We are passionate about serving you to ensure that you get a different form of information that can help you to leapfrog your operation, your brand, to make impact locally, regionally, and internationally. Your corporate culture must be built out to impact the specific target market. This is where you get customer retention. This is where you are able to build confidence, trust, and credibility in the eyes of the consumer. But do you have a blueprint to ensure that you're converting first-time users into lifetime customers? Do you have this blueprint? We work with you on this blueprint and we help you to build out this blueprint to make impact, larger than life impact with your customer base. And who don't want to make larger than life impact with your customer base? Of course, at the end of the day, you will cash flow from them. So you want to really commit the time, talent, and the resources to understand your target market, their needs, wants, and expectations, dreams, hopes, and aspirations, lifestyle, culture, and social growth, and build out your corporate culture to reach those expectations. And if you're smart enough, you're going to go beyond those expectations. And we can show you how to achieve all of this at the most cost-effective means. You can do it. You also want to impact the general public. Why? Because they too have an opinion. And if you don't work to shape their opinion, believe me, your competition may be working to shape their opinion of you. So if you're voiceless in this communication space and you're not putting your brand out there, you're not articulating yourself around your brand, there are those who are wicked enough to communicate information about your brand that is totally untrue. Why? Because it serves their interests. The general public are the people who can help you to find referrals. They can refer persons to you. They can become your biggest cheerleaders, and you have never met them. You don't even know them. But because you communicate information out there, your communication process is working well enough. And we talk about this as one of our the ecosystem. We talk about the communication media ecosystem, and you need to understand it. This is what's going to allow you to make impact across the board, especially at this point when you talk about the general public. The ability to do this and do this right is what's going to allow you to cash flow maximize. All right? To cash flow maximize. And of course, you're into business to cash flow maximize. But my son would say, no, that you're into business to add value and fix problems. And if you don't add value and fix problems, it's going to compromise your ability to cash flow maximize. Smart kid, you know. So I trust that you're taking notes on the capital markets ecosystem. Now, so far we have looked at a range of issues relating to corporate financing. I want to shift the focus just a little bit over to wealth management, personal wealth management. But there's also a few more things that I want to add. Bear with me just a little bit. Just before I go over to the personal debt management and personal wealth management, there's a few other things that I must add. I can't leave this out. All right, I must add it. I owe it to you to share this information with you. I want to talk a little bit about corporate wealth management and what exactly am I talking about here. I'm talking about corporate asset and asset management. I briefly hinted on this subject matter early on in this program. We're seeing the most successful brands, the most successful businesses across the world. And one typical example that I'm going to give you of this is PayPal, an excellent model. PayPal has built up a brand, has cash flow their brand. And what they have done, they have taken the excess liquidity, their excess cash, and they've put it on the financial management, meaning that they have freed up all of that profit and put it back on the asset management where it is generating additional funds. It is generating way, way, way above sitting in any special business account where they're going to get perhaps 0.1% interest rate. As we talk about corporate wealth management, this is one true example that is being practiced among the top 100 companies in the world. There are these models, and there are many other models that we want to share with you. And perhaps when you're ready, we can help you to build out these portfolios. All right. Another public figure that is out there that I see is doing this is a strong mind in real estate, Grant Cardone. He invited the public to get involved in the investment space, and he put those capital back on the investment. Smart way of doing business. All right. Along with this, I want to talk about what is known as corporate cash flow protection. You have your excess liquidity. You have the business cash flow and you're happy about it. You're smiling to the bank and because you have positive cash flow. But millions of business owners across the world, you experience what happened when the pandemic struck. Many businesses were forced to lay off their employees, who is often referred to as team players and family members, but you had to put your team players and family members out of the house into the cold. That's not how we treat family members. But because of the reality is, you were forced to do this. You were forced to do this because no one was working with you on what we call the corporate paycheck protection. In the developed world, they had the PPP, the Paycheck Protection Program, that really give the support to companies to continue paying their staff without laying them off, and the government kick in for that. In middle income and developing economies, they were not so lucky to have those things. So it is necessary that in developing and middle income economies, the entrepreneurs, the great minds, the global thinkers and social actors, the innovators in this space, you have to come up with innovative approaches to mitigate this process. Again, this is all debt mitigation. I'm investing with you. A pandemic striker, you tell me that I cannot remit dividends to my LPs. And I have LPs that are SWF. I have LPs who are pension funds, insurance funds, high net worth individuals, super high net individuals. And I have to go to them with a sad story. SWFs are big, countries with big capital portfolios, and they want their GDP to show up, and I representing their portfolio. And I'm telling them that we can't cash flow. But any businesses that is not prepared to take some of these notes and work on them, that's going to expose your investor. Believe me, you're not going to get funding from them. Smart investors that can take the negative realities and build a positive reality out of it is the people that you need to be working with. When VC, venture capitalists, and private equity investors bring funds to you, they're not putting their personal funds to you. They're taking funds from LPs, limited partners, high net worth individuals, and they're bringing it to you. How are you protected? How are they protecting their interest? And how are you protecting their interest to invest in you? Are you thinking about the corporate paycheck protection? Now, if you don't know how, I want to say to you that's why we are here at Global Capital Inc. We are here to do that think tanking for you, to do some of that heavy lifting for you, to bring these kind of information to you that would transform the way you do business. We hear your cry. Traditional insurance companies not providing you with this kind of cash flow protection program. We have listened to that cry, but we have listened enough, and we have now taken a bold step to do the research, do the analysis, and bring think tankers together and develop business models to help you along this path to mitigate risk associated with your business cash flow. How about the Paycheck Protection Program? Is there a smart way to build this Paycheck Protection Program where your staff don't have to be worried about being laid off, and you don't have to worry about breaking the bank to pay monies out to your staff when the business is not cash flowing? The business is cash flowing, you don't have to go into that. You have a smart Paycheck Protection Program. If there's no man-made or natural disaster, you don't have to study. Touch that, and that continue to give you and your employees the protection that they need to continue being a value member of your family, a value member of your team. These are things that we have thought through. We think through the process. And beyond thinking through, we have built out strong thesis to really help you to navigate this process. It don't have to cause you a dying the adaptation of these models that we give to you. It don't have to cause you an arm and a leg. Having the information will not hurt. You want to also talk about personal paycheck protection. All right, and this is where we're talking here about corporate wealth management. You want to manage this process. You know, one of the things that we talk about, we love to talk about the proactive leaders. And there's three essential characteristics about the proactive leaders that we just love talking about. They think ahead. Are you thinking ahead about the next crisis and how you're going to mitigate it? Risk management. They see beyond problems. Are you seeing beyond all the barriers that are there in front of you, preventing you from doing the things that you want to do? Are you taking informed action to achieve desired results? Informed action is a beautiful terminology because you're informed when you're taking action. Now, if you don't know how to take informed action, the smart thing to do is to pull in the subject matter expert that have that background, have that experience, have that know-how to show you how to play the game. We all rub shoulders with each other. We, share that information and ensure that you are equipped enough to win the game. What does your corporate culture say about all of these things? And I'm saying this again, and I want to emphasize it. To do all of this, it don't have to cause you an arm and a leg. In fact, you do it the smart way, and we will work with you in the smart way. It don't have to cause you a dime. All right? It don't have to cost you a dime. And again, this is one of the reasons why I would say to people, there is a need for a new way of looking at financial management. While it is new in some parts of the world, it is not new in the developed world. But it's important that we, in developing a middle income economy, you start to adopt these financial models as relates to managing your business. Absolutely necessary. All right, let me go to a little softer touch now. I want to talk a little bit about personal debt management. And I just want to hint a little bit, we see hundreds of thousands, millions of people across the world. You go to buy real estate, you buy your first home and you feel proud about it. It's a proud moment because you are now providing shelter for yourself and shelter for your loved ones. And you feel proud that you have worked for many years, you have accumulated disposable income, at least that 10% that you need to deposit, and you're now excited to go buy your first home. But if you're buying that home to live in that home, if you're buying that home to pay from your primary source of income, the question that you must ask yourself, is it a good debt or a bad debt? And this is important information for you to have when you're going to invest in perhaps the highest assets that you're going to invest in your entire life. Is it a good debt or a bad debt? With the pandemic that struck, many of those persons who thought that that asset was an asset, their good asset, they recognized that it was not, because your ability to reach your monthly debt obligation was interrupted because you were laid off, because you were given less hours to work. Your cash flow significantly reduced and you were unable to reach that monthly debt obligation. Now, this is what bad debt does to you. Good debt is something totally different, and you need to understand it. Good debt pays for itself. So I'm not saying to you that you don't need to buy your home. All of you need to have your home. But I'm just saying to you that there is a smart way and there is a hard way, a risky way of doing this. And we are willing to work with you and your employees to ensure that they are making the smartest decision when it comes to wealth accumulation, asset accumulation. It is time that we start to amplify this conversation around financial intelligence. This is no longer a taboo subject matter. It is necessary. It is absolutely necessary in the leapfrogging process of any nation. The more disposable income the citizenry has, is the more money they have to spend to live the quality of life that they know they deserve. They can invest more in recreation, boost tourism. They can invest more in products and services, boost industrialization. They can invest more in their children's education, the need for a better educational system. They have more disposable income to ensure that these industries are growing and striving. And as these industries grow and strive, is more money being remitted to the government for road infrastructure, to move to clean energy grid, to leapfrog the economy. All right, you move from developing into middle income into developed economy. The people play a tremendous role. This is no guesswork. We have done the research, we have done the study for many, many years, academically and beyond, and we see how the developed world become developed economies. Look what China is doing. China has moved people out of, the doldrums, and they're reorienting them at a whole nother level. They're taking them out of poverty and moving them to a whole nother middle class status. That's what we call visionary leadership. All of this are important things to look at. Call it that we do too much a deep analysis, but I'm saying that when you are taking the public funds to reinvest it, when you're investing, public funds, whether from the DCM, the ECM, or the CCM, it's important that you do these kind of analysis to minimize the risk associated with that. And you yourself need to protect yourself, because when you go to the DCM to take a debt, remember it's collateralized. So if you don't cash flow and you can't deal with your debt obligation, what they do? They take your mommy, daddy, uncle, auntie, cousin, friend assets and they take it. They lose? No, they lose. You lose. And you hurt your mommy, daddy, uncle, auntie, friend who decide to help you because you didn't do the analysis, or you didn't connect with the right people that can help you to do the analysis to minimize your risk. Absolutely necessary. All right, I'm coming down, I'm winding down. I'm going to be talking about one more issue here. This is what we call personal wealth management. We at Global Capital Inc. and 10X Branded and Marketed LLC, we are truly committed to bring high level of financial intelligence to businesses and to the average man out there who wants to achieve more financially. All right, we want businesses to leapfrog. We want businesses to become like the top 100 companies. That's why we continue to research those companies and, develop strong models that can really empower businesses to do better. But we also see the importance of empowering the civil society, because if they're financially literate, they have more disposable income to pump right back into your business to help you reach your business financial objectives. So we create win-win situations here. If people don't have money to spend, they can't spend at your business. If they have money to spend, you can smile some more because they're going to buy more from your business. So we also talk about personal wealth management. And what exactly are we talking about? What do we mean when we talk about personal wealth management? We're talking about smart investment savers account. Do you have a smart investment savings account? I want you to listen to these words very carefully. It's a smart, it's an investment, it's a savings account. Which means that you're not saving to gain the interest. You don't want the interest. You're saving to accumulate, to go into investment portfolio. But remember, this is not investment advice. If you want that, you're going to reach out to us and we will connect you with all of the right players to talk to you about that. Are you thinking about investing in ETF, exchange trade funds? What is an ETF? An ETF is different from, the S&P 500. The ETF might have 100 companies that are the top performers. And they're ETF managers who will look at the top performers by doing everything that I just talked about, ensure that they are strong. You take that portfolio and you invest in it. One, your risk is minimized because you're not buying a single stock, you're buying an ETF. So your risk is spread across the entire portfolio. The benefits is spread across the entire portfolio. Do you know how to do this? Are you investing in an index fund or the S&P 500? This is what I'm talking about. We believe that people and families across the world, it's important for you to have this kind of information. It's long overdue. And it's our commitment to bring this kind of information to you to help you to make informed and educated decisions about personal wealth management and building. Are you looking at your income performing assets? The smart investment savers account can be leveraged as income producing assets. Yes, it can be done. Smart people that understand wealth management, they leverage all of these portfolios. They're not leaving their jobs, but they have their job as their primary source of income, but they have secondary sources of income, multiple secondary sources of income. And this is how you play the wealth game, the wealth building game. There's no harm in working. Later on, we're going to speak to that subject matter from a dynamic standpoint. For your human beings, and I know that. We will speak to that. There's no harm in working, however. Keeps you exercise, keeps you healthy, keeps the brains working the way it's supposed to be working. and it adds years to life once the environment is right. There's so much, but you're entitled to understand how to build wealth, and that's why we're here. Do you have an IRA, an investment retirement account? Life expectancy is there. You don't want to work for your entire life expectancy. You want to have some time to relax and go on the beach with your family, go to Timbuktu and explore the world. Are you thinking about your IRA, investment retirement account, that allows you to throw back, relax, and enjoy life? You don't have to worry about cash flow because you have thought about this 10, 20, 30, 40 years before you reach that point of retirement. Are you thinking about early retirement plans? As we talk about personal wealth management, these are all things that we get into. And we're going to be hosting a range of masterclass on this platform, Global Capital Inc. Online Radio and Television, in the classroom, in the organizations across the world, to ensure that we can raise the intelligent level of people about the importance of these things. Are you thinking about your children's college funds? Is this part of your personal wealth management portfolio? Or are you waiting until the day for them to go to college to start thinking about this? No. You think about these things years in advance. You make provision for these things years in advance. And if you don't have a wealth manager, a PFA, a professional financial advisor, personal financial advisors that can help you navigate this process, if you don't have one, I want to encourage you to reach out to us. We'll be happy to have this conversation with you, this consultation with you. All right? We'll be happy to do so. Are you thinking about business as a part of your retirement game plan? And this is a very tricky one. I'm winding down, folks. I know I went a bit long today, but bear with me. I do all of this all because of you, not because of me, because of you. Are you thinking of business ownership as a part of your retirement game plan? One of the things that I often talk about is that there is a right way and a wrong way to start a business. Yes, there is a right way and there's a wrong way to start a business. You don't start a business because you see someone is doing it and they're cash flowing. Because one of the realities of a business is the more person that gets into that space reduces the chance of income generation. So that's not the right motive to start. So these are things that we work with you for you to understand. All right. It's necessary. It's important for you to know this. You know, starting a business doesn't guarantee the business is going to be successful. Particularly so if you're not doing the market analytics. If you're doing this thing from a speculative standpoint, you're using no secondary accurate data, reliable data. You're not doing primary market research to inform that business decision. It's the wrong way to start the business. You need the intelligence. There's also a right way and a wrong way to cash flow. the brand. All right. There's a right way and what we call the wrong. Now, what we have seen across the world is that a number of entrepreneurs, they have been finding creative and innovative ways of starting their business. They start a business not to work in the business, but for the business to work for them. Do you know how to apply these techniques? What this does, it allows you to free up more time for yourself so you could focus on the next income generating project, on the next income producing asset. Smart entrepreneurs, smart thinkers who are trained to become the global thinkers, social actors, the transformational leaders. They're applying these techniques, they're applying these tools, and we are here to help you do the same. All right. I'm going to stop here today. Today, we cover a broad heading. We look at business success ecosystem. The area of this ecosystem that we look at is the capital markets ecosystem. And on this heading, we look at corporate debt management, corporate wealth management, personal debt management, and personal wealth management. So those are the four headings that we look at today. I know the program was a little long. We are just scratching the surface here, but this is at least to really whet your appetite when we talk of these ecosystems, the importance of these systems to help you to make better business decisions. So if you're serious about business and you want to leapfrog your operation, you want to grow your brand with local, regional, and international relevance, I want to encourage you to reach out to us. Of course, it's not me alone. I have a team of persons who are, certified public accountants. They are economists who would have lectured at the top universities in the world. We have persons who are playing in the venture capital space, the private equity space. We have a team of strong minds that are all committed to go to work. So if you're in business or you intend to get into business, I want to ask you to like, subscribe, and share. Reach out to us. Feel free to reach out to us to have a free consultation as to how the new ecosystems that we have built out can help you achieve more in a shorter period of time. Be blessed and see you in the next broadcast. But just before you go, my name is Gary Thompson. I'm a business development consultant by profession. I'm a humanitarian by nature, and I'm the self-published best-selling author of several books, including Billionaire Codes and Manager's Toolkit. My most recent book is titled 10X Branding and Marketing LLC. You don't want to miss it. 10X Branding and Marketing Blueprint Business Ecosystems. And most of the things that we've discussed today is in that book and so much more. All right. So keep following me. And when that book is ready for the market, you will be the first to know. Be blessed. Remember, take care of yourself, take care of your loved ones. Remember, we're still in the period of the global pandemic, so I want to really encourage you to be smart, all right? Regardless of where you're at, I want you to be smart. All right. Be blessed and see you in the next broadcast.